Hello and welcome to Crypto Weeklies. In this video, we'll continue our analysis of Ethereum. If you like the content, please give us a like and subscribe. Let's get started. None of the content is financial advice. This is analysis of Ethereum and its token ETH. We'll start with the machine learning based price forecast. Now that the price of ETH is coming in at around 2500, it has kind of stalled for the last 2 to 3 weeks over here. You can see that is getting reflected on this weekly average based analysis for ETH since 2017. This model uses price action till since 2017 at a weekly average level to inform the machine learning model based training on how the price has behaved over the last 7-8 years. And with the seasonality based ARIMA models as well as machine learning techniques such as LSTM and XGBoost. This model predicts what the price could do in the next 6 months in one standard deviation bull case, in one standard deviation bear case, in the base case, and in euphoria cases. So let's get started. In the bull case, in the next 6 months per this model, the price for ETH could be between $2,800 and about $4,400, slightly higher than the three peaks that ETH presented in 2024, one in March, April, then in June, and then the third one in December time period. Right now, ETH has stalled. If you look at the price action, it is coming to a key level of potential resistance, this green line over here, this series of higher highs that ETH enjoyed till about higher lows that ETH enjoyed till about February 2025. This was broken heavily in April when price of ETH was at around $1,500. Now it's coming back to this green line at around $2,900. That's key area of resistance again from the Fibonacci levels as well at 2,900, as well as if there is a support at around 2,400 close to the current price, the 0.382 Fib level. So key points to note if the prices hold that support. Also potentially the 20-week simple moving average and the 21-week exponential moving average is coming to that level of about $2,365. So that's again an area of confluence. So in terms of how the prices could shape in the next 6 months, again no one can tell with certainty. But this directionality model, this pink line over here, helps identify, if all things equal, where is the likely direction of price of ETH. This model says that all things equal, the price tends to go up with time then down with time. Again, that is evidenced even at just by looking at the chart that ETH over the macro period of time has been putting a lot of higher highs and higher lows. And in case that there is a downturn in the next 6 months, the one standard deviation support for ETH is between $1,700 and about $2,437, kind of close to that level of about 0.283 at around 1850 level. The reason one of the reason that ETH's rally has on its USD pair has stalled out is because ETH on its Bitcoin pair visited the range lows. And again a macro area of range low from all the way back to about 2019 area over here at the bottoms of the bear market of 2019 for ETH Bitcoin. From there, now in 2025 it did come really close to those lows in April, and now it has rallied back to the bull market support band or the 20-week moving average and 21-week exponential moving average on ETH Bitcoin coming in at around 0.024 and 0.025. So slightly above the current valuation. You can see a major area of resistance all the way throughout the bear market for ETH Bitcoin since about 2023. For the last 2 years, there have been only a few instances, a couple of weeks, where the price, the valuation of ETH on its Bitcoin pair is above this heavy line of resistance for the last 2.5 years. And again this could likely continue till there is sufficient liquidity in the market. Right now, if you look at any indicators related to crypto, it's all of the seasonality indicators say it's heavy Bitcoin season. Again, back on our own website, if you look at the popularity of narratives on the word cloud, again all of the content available for free on cryptoweeklies.com, link on the bottom of your screen. This Bitcoin narrative is gaining far more traction than any other narrative. in terms of the market attention, as well as the overall sentiment is also, if you look at over here of the narrative over the last 24 hours, is 83%. That is a lot of bullish narratives, but again they are far and few in between. If you look at the bar chart of the narrative, again you can hover over on each of the narrative to look at the headlines, and classified by the machine learning model if it's bullish, bearish, or neutral. In terms of the narratives that are related to Ethereum, again they are gaining some traction. Ethereum's presence on this word cloud speaks volume of its presence in the crypto market. Although if one area of concern is that, again, Bitcoin's market cap is at around 2 trillion. The difference between Bitcoin and ETH market cap is now more than almost 1.7 trillion dollars difference. Again, that's more than half of the total market cap of crypto. So just the difference between Bitcoin, which is number one, and ETH, which is number two in terms of market cap, just the difference between their two market cap accounts for more than half of the entire market cap of the industry. So that's one area to look for if it could manage to gain some hold on Bitcoin again somewhere over here. That is the projection for just an extrapolation based projection for this market cycle. Again, you can see across the market cycle from the Fibonacci levels. In 2017, the Fib level that ETH reached in 2017 to 2018 bear market, the 0.5 level became the highs for the 2022 bull market for ETH. That means it could rally only to 0.5 level. If the same thing happens this time around, that is kind of a bear case for ETH. If it goes to 0.5 Fib level, that is from the current levels, again slightly, you can see slightly higher than that 105% gain. That means if Bitcoin does a 2x, ETH does a 4x basically. If Bitcoin does a 1.5x, then ETH does a 3x from the current price if it were to go to that level. So if let's say Bitcoin tops out at somewhere at around again it has gone to that 1.618 Fib level on its own USD pair. If it goes to that 2.618 at around 150k level over here, and that means it's 1.5x from the current price. If ETH were to do a 2x on its Bitcoin rallies, so let's say over here if Bitcoin goes to 1.5x of the of the current price, and if ETH does a 2x then of the current price, that's again a 3 times in terms of times. But if you look it in terms of percentages, it would be 1.5 of Bitcoin's price is at around again 100k. That is 150k for Bitcoin on its USD pair, and ETH doing a 2x of that. Again, we have to divide it by this amount by the ETH BTC ratio. At that point in time, it's at around 0.053. So that should give 0 multiplied by 0.053. That gets an ETH valuation at around roughly speaking, my apologies, roughly speaking, that 150k Bitcoin, and then the valuation of ETH at that point in time at around, based on this Fib level over here, at around 0.053 at 0.5 Fib level, that takes each price at around $8,000. So that's one conservative projection. If ETH were to, in this market cycle, were to go to that 0.618, that's all the way about 0.0616 would be over here multiplied by 0.0616. That takes each USD price action at around $9,400. Again, coming back to the euphoria case for ETH, per the projections, again that is a 2 standard deviation ceiling for ETH per the machine learning based model is between 3k and about 6.2k. So it's a $9,000 ETH would take something more than a 2 standard deviation rally at this point, this late into the bull run. That would be a 3 standard deviation or a blow off top, where the top is in per the machine learning based model. There is a 99.7% chance that the top is inside this red territory, that is between $3,280 and $8,872. So that is close enough to that $9,200 target. If ETH were to go to that 0.616 on its fib level, on its ETH BTC level, again the rally could surprise us all between, and the peak could be somewhere between 0.5 and 0.618 fib level for ETH BTC. So again, as the risk levels amplify, those are the better indicators than any USD projection. At this point, Bitcoin risk is around 46%. ETH risk is fairly below that. Again, this indicates that Bitcoin is still in charge. This orange line is Bitcoin on its 20-week moving average, how it is doing in November-December time period in 2024. Risk was higher than 0.8. Then this red territory where it's closer to a peak, green territory where it's closer to a bottom. So this indicator that in April 2025 the risks were very low. We made a lot of videos related to Bitcoin and ETH risk. If you were subscribed back then, you would have understood that how that market was undervalued at that point. Right now Bitcoin risk is at 46%, ETH risk is 41%. Again, both are in moderate risk territory. If they were to go to somewhere at, let's say, 60 to 80% risk, that would trigger some of the distribution related market phases, and definitely when they go to if and when they go to this highest risk band this late into the post halving year, that could signal the euphoria case or the 3 standard deviation blow off top case for ETH at around $8,800, roughly speaking. If we were to look at the fair value for ETH, it's still per the polynomial regression based model, it's at around 3,820. So ETH is still deeply undervalued on its regression based pair. But what has happened since about April, as the price kind of came close to this 2 standard deviation residual to the downside, major areas of bottom were formed. Now the price is above the 1 standard deviation residual at around 2,350. Again, one level of support over here, and then the next, if there is a rally, the next target is around 3,820. That's the fair value for ETH. If it were to go slightly higher than the fair value, like it does in the post halving years, again last time in the halving year also, ETH touched this line thrice. If it were to go to that regression channel, end of the regression channel at around 6,222, that's where the machine learning based 2 standard deviation ceiling was at, the 6,222. That could be one area of interest. The 2 standard deviation, I think per my interpretation, is kind of out of scope. Again, as the asset matures across multiple market cycles, reaching the 2 standard deviation ceiling is not going to be easy every time around. The peak could be somewhere between the midpoint of this 10k and 16k. Divide and take an average of that. That gets you somewhere closer to that 8.1k level for ETH. That again 6,200 level per the regression based model takes the price action at around 6,300 level. All in all, if you look at the time weighted average price risk, this SMA risk and the DCA risk, if we were to take a composite of all the risk based targets for ETH, the estimated bull run peak with these 3 individual risk levels is coming in at around 8,000, slightly higher than 8,000, representing a reward of 3.2x. And that's the prediction for ETH based on all of our indicators. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.